Another question I've been asked is, how do you maximise your income against the backdrop of IR35 with the business entity tests as an IT contractor in London? Well, firstly, I would make the point that I offer this advice as common sense advice and not as a tax expert. Additionally, IR35 was introduced in early 2000 to try and stop the perception that people were quitting a job on a Friday and returning to the same place on a Monday as a contractor, therefore paying less tax. This was never actually the case in great numbers. However, there was no doubt that if the average person, say, is staying in a job less than 2 years and you need 2 years to get job security, that the attraction to a permanent job or permanent position is diminishing and larger numbers of people are tending to move towards contracting. And there is a possibility there that the government is going to earn less tax as a result. The purpose of IR35 was a test designed to see whether you were a true freelance contractor or a genuine person in business of your own accord. And the problem was that the government believes that if you are an employee or disguised employee, you should pay full tax under the PAYE system and national insurance. It judges you principally on two things. One, the actual contract you have with the client and even agency, and two, the actual working conditions that you work under. And these will determine across a whole range of things whether you are caught within or by IR35. The benefit to you to being outside of IR35 will be immense, because if you are operating through a limited company, enabling you to net, say, 80% of your gross income, this compares very favourably with the PAYE system, where you can lose between 30% and 50% of your income. You need the right contract to be judged to be outside of IR35, and this should cover a number of different things, which I'll go through point by point. Point 1. Name your company, your limited company, as the supplier, and your name, as the consultant, or even exclude your actual name but just name the company as supplying a consultant. 2. Your contract mustn't have any direction or control in it. You must be left to determine how you supply the service. 3. A substitution clause which is unfettered. In other words, you supply the service, and if you weren't available, you could nominate someone else as your deputy. Point 4. There are many more things that need to be checked for in a contract in order to keep you outside of IR35. And above all, you would need a professional to assess this, in my view. The normal fee for this is £100. And there are people on the market that can do this for you. However, Bytes will do this if you are using them as part of their service and not charge you any additional amount for this. One of the most worrying points is that HMRC have the ability to investigate and go back over your contract history for at least 5 years to decide whether you might owe them money. Not only that the money that they determine that you owe them can be doubled as a fine for not actually checking professionally whether you were caught by IR35 or not. So ignorance is no excuse for the law, or choosing to ignore it is no excuse, and it could cost you an awful lot of money. The key thing is that you must reasonably believe and have taken steps to find out that you were outside of IR35, or declared that you were caught by IR35 and paid up. It is quite a worry to have to think that they could go back over a very long period of time. So it's very, very important to handle your contract and get all your ducks in a row. The sixth point I would make is that HMRC are only going to investigate you if they have a reasonable suspicion that you are caught by IR35 and that they really do feel that they can recover their fees. It takes time and money to investigate, and they have to be able to get that money back and more. So if you have everything lined up correctly, the chances are they won't have that reason to want to investigate you. In practice, HMRC investigations often occur because you've stuck your head up into the radar, perhaps as a new contractor or through a sudden change in your circumstances, such as changing from being a PAYE worker and moving to a limited company, for example, during the same contract. So if your contract is well worded and you run your tax affairs through a good professional accountancy practice, you should find that with good UK tax advice that it is unlikely that you will get an investigation. A couple of years ago, HMRC introduced a test as a screen which they could use over the telephone, rather like a telephone interview, to identify whether or not they thought the probability of a successful investigation was quite high, and therefore whether an investigation would be worthwhile. They called this the business entity test, and we've just heard that they are going to withdraw the tests in April 2015. However, they currently remain in place, and the ethos behind the test still remains. The fundamental question is, how are HMRC judging you to be inside or outside of IR35? And whilst there's been a lot published about this, there is no absolute finite example which would state. There are cases where we've got case law and we have the tests or point system in place at the moment. It is a balanced scale, and you have to tip the scales in your favour. Now, at the moment we do this by looking at your contractual circumstances and using the test and judging you to have at least 21 plus points. When the tests go, many of those things that we're looking at will remain despite the fact the test isn't there. And these are things like ensuring that you have professional indemnity insurance, so you're in business of your own accord, ensuring that you have a nominated substitute or substitution clause in place, that you have a private office to work from, that you've employed or engaged marketing services to market and advertise your business. There's a whole range and list of things that you can put in there which would mean that you're at low risk for being caught by IR35, and therefore, as far as HMRC is concerned, probably non-viable for an investigation. Now, the only other way they might want to investigate you is if, again, you stick your head above the parapet and you don't do things properly, like filing your tax return, or, for example, you provide a red flag to HMRC by not being cooperative about paying your taxes on time or doing your returns for your company or your corporation tax. At Byte, we do help people with their contracts, and we would expect most people to get 21 plus points on the business entity test, and those principles will remain in place. And we therefore believe that the majority of people that we deal with will be very low risk. In fact, we go so far as to say that we would advise people who we find to be high risk to actually contract through the PAYE system and not as a limited company contractor, or keep their limited company dormant for short period of time until they move to a contract that is definitively outside of IR35.
Yeah.
So in summary to the question about maximising income and IR35, you firstly need to have your own limited company. You also need a good accountant and tax advisor, and currently that would be someone who helped you ensure that you knew that you had 21 plus points on the business entity tests, and in fact had something like a serviced office facility that you were renting, and were engaging professional services so that it helped you demonstrate that you were in business of your own accord. You would also crucially need a professionally worded contract with a substitution clause and clearly a statement that you weren't being directed or controlled. And you need to avoid that you don't stick your head above the parapet as far as HMRC is concerned by professionally conducting your business affairs, and your accountant should help you do that. And I would add that Byte will offer the opportunity for people to work with us to genuinely demonstrate that they are in business of their own accord as part of our services, and the fact therefore that they are in all probability outside of IR35. However, I would say there's no such thing as anyone who is guaranteed 100% outside of IR35, and indeed if you do come across any organisation that tries to state that, I would run a mile. It is a matter of managing the scales, the balance of the scales and commercial risk, but you should make a professional judgment and get advice in order that you make that judgment and avoid any fines.